Okay, in this final video we're going to be looking at positive and negative externalities and also looking at the impact that asymmetric information can have on the market. So first things first, just following on from the last video, we're looking at why vaccinations are a positive externality and how does the government intervene to reduce the market failure. So again, explain the positive positive externality in consumption. And that's because whenever you get your children vaccinated, there's benefits for third parties. So the benefits are that other children don't get sick, there's less lost days of work for parents, for example, looking after their kids, there's lower healthcare costs for the government, increased GDP because less people are missing days of work. They're all third-party benefits. Identify that self-interested consumers are assumed to only care about their private benefits, so that you only get your children vaccinated for their benefit. That leads to an under-allocation of resources to vaccinations. The government therefore step in, and they step in a range of different ways. They can provide subsidies to reduce the cost of vaccinations. That reduces the cost, makes them more affordable. Or they can do things like the no jab, no pay. So if you don't vaccinate your children, they don't get access to childcare subsidies. Advertising. So if the no jab, no pay, that would increase demand. Even though they're giving a subsidy, it's not for vaccinations in that case. It's for childcare if you vaccinate your children. So the demand curve would actually shift to the right for vaccinations. Advertising will encourage demand, will shift the demand curve to the right. And this all helps to internalize the social benefits and lead to a more socially optimal allocation of vaccinations. Now, again, if we're looking at climate change, why is climate change a market failure and how can the government intervene to achieve a more efficient allocation of resources? Define market failure, explain that climate change is a negative externality in both production and consumption, and then provide some examples. So it occurs when firms produce CO2, when they're making goods and services, but it also occurs when we use electricity, when we drive our cars. This causes climate change because it burns fossil fuels. That leads to CO2, and then that leads to rising sea levels, airborne diseases, droughts, floods, etc. Could also lead to reduced income from tourism in the future because it might affect the Great Barrier Reef. But because these costs are externalized, they're not considered by self-interested producers. They affect third parties, therefore we don't take them into account. Therefore, that leads to an over-allocation of production to areas that cause CO2. So the government steps in by taxing, subsidising, or even advertising to make sure that we're reducing our carbon emissions. Explain the impact of a carbon tax. That shifts supply to the left, increases the relative price, and discourages consumers from using non-renewable energy or encourages production using renewable energy sources. If you're looking at subsidies, that lowers firms' cost of production and encourages them to invest in renewable energy. This alters relative prices. It helps to internalise the social costs, or the external costs, and leads to a more socially optimal allocation of resources. So, why does the existence of negative externalities lead to an over-allocation of resources to certain industries? Goods with negative externalities are over-allocated in the free market because self-interested consumers don't consider the third-party costs. Provide an example. For example, alcohol, they don't consider the impacts from binge drinking, alcohol-fueled violence, related hospital expenditure, and therefore they produce more than what is socially optimal. Okay, explain why the existence of positive externalities leads to an under-allocation. Positive externalities are under-allocated because consumers and producers don't take into account the social or third-party benefits. When students receive an education, they're less likely to be involved in crime, they pay tax to the government. These are third-party benefits that consumers don't consider, and therefore too few resources are allocated to the production and consumption of education. Explain how an increase in the level of taxes on alcopops may influence the allocation of resources. Okay, there's clear steps you need to take here. So an alcopops is a tax that is levied on producers. This aims to increase the relative price of selling the product, which then gets passed on to consumers in the form of higher prices. Make sure you really clearly articulate that the tax will be passed on to consumers in the form of higher prices. This increases its relative price, reduces profit margins, and we hope that labour, land and capital resources will shift into less harmful things for society, and that's because alcohol consumption can cause violence, health problems and a culture of binge drinking. So make it clear what the externality was in the first place. Even though you're getting asked here how the tax influenced the allocation of resources, also make it clear what the negative externality was. Unfortunately, the tax can be ineffective because we may just consume other products like beer and wine, etc., that now have lower costs of production. We can also have the relatively inelastic demand. So while in theory this should reduce alcohol consumption, unfortunately alcohol has an inelastic demand, which could mean the tax is less effective in allocating resources than what we would hope. Okay, so a couple of other ones. Referring to externalities and market failure, explain why governments are concerned about the consumption of SSBs. Make it really clear they have negative effects not only on the consumer but third parties. They're goods with negative externalities in consumption. Left unregulated, the market will overproduce these products because we don't take into account the third-party costs. Therefore, we fail to achieve an efficient allocation of resources because there's an over-allocation of resources to goods with social problems or social issues for society. Okay, how do we intervene? So, explain two types of intervention that can lead to a more efficient allocation of resources. Refer to relative prices. Okay, so an indirect tax will therefore increase the relative price of SSBs. This will encourage consumers to substitute out of SSBs and into healthier products. This should lead to less production of harmful products. You need to explain why it's more efficient. That will lead to less production of harmful products and improve efficiency in the allocation of resources because resources are shifted into less desirable products. Okay, and last question. Define the term subsidy and describe one economic rationale for providing subsidies. Answer refer to at least one type of market failure. So a subsidy is defined as a financial or other assistance provided by governments in order to support some form of economic activity. It's generally cash support, but it can also be things like interest-free loans or tax concessions. Subsidies are usually given to promote the production of those goods and services that are underproduced in a free market. In other words, subsidies are typically designed to address market failures for things like positive externalities, where with the absence of government intervention, there would be an under-allocation of resources to the production of these products. The subsidy incentivizes producers to produce greater quantities, which helps to address the market failure. Okay, the last market failure which we're looking at is asymmetric information. So, what does adverse selection mean? Why does it lead to decreased material living standards? So, because adverse selection is when you purchase suboptimally, and basically that can reduce material living standards for a range of reasons. So this is a question from the doc that you guys are working through. Because you overspend on products, so for example, if you spend $5,000 on a second-hand car and then you never use it, that means you've got $5,000 less to spend on other products. So it hurts your material living standards because your purchasing power goes down because you're being overcharged for products, therefore you've got less money. So the same applies if you go to a dentist or a mechanic. If you spend too much money there, it hurts your material living standards because you've got less money to spend on other goods and services. If you're being overcharged for health or car insurance due to others engaging in moral hazard, again, you have less money for other purchases. So if you get overcharged for health insurance because too many people are claiming, again, that reduces your material living standards. How do you clearly articulate the inefficiency caused by asymmetric information or moral hazard in adverse selection? I'm not sure how consumers not being able to make informed decisions is inefficient. So basically, efficiency is about maximising living standards. So if we look at the second-hand car market, the person purchasing a poor quality car is inefficient as it harms their welfare, and that leads to too many resources being allocated towards both poor second-hand cars and new cars, and that's the inefficiency in the market. So when you're talking about inefficiencies, it's not only the initial purchase, but it's the fact that too many resources then get allocated towards new cars and not enough people are purchasing quality second-hand cars, so there's an under-allocation of resources to quality second-hand cars. If you're looking at the car insurance market, you're looking at the inefficiencies include that there's just more accidents. So the fact that people drive in a more risky fashion, that creates accidents, that's inefficient. And secondly, safe drivers don't get insurance and therefore they're not covered in the event of an accident. Therefore, that's inefficient as well because that hurts their living standards. Identify one example and describe how the existence of asymmetric information leads to adverse selection and therefore an inefficient allocation of resources. So, adverse selection is when asymmetric information leads to the uninformed buyer purchasing adversely, resulting in an over or under allocation of resources to the production of a particular good or service. For example, in the car salesman example, selling a car above its true value, so it might have faulty parts, leads to consumers making uninformed decisions and paying a higher price than the value of the car. The problem in this market is not only for the buyer of the used car, whose material living standards are reduced by wasting money on a lemon car, but also for owners of used cars who wish to sell them. Because consumers become skeptical of buying old cars, individuals will not be able to get as much for selling used cars that do not have problems and will not receive the true value of their products. This is less favourable for society as buyers and sellers cannot transact the appropriate market price and engage in transactions that are mutually beneficial. Identify why the problem of moral hazard may arise from asymmetric information and why it leads to an inefficient allocation of resources. So moral hazard is a form of market failure associated with asymmetric information. It occurs when economic agents adjust their behaviour to one that is less efficient from society's point of view. So one mark for defining what moral hazard is. It typically occurs in insurance, where economic agents are somewhat insured against the risk of loss and then become less risk averse in their actions because losses incurred are transferred to other parties. They then start to act in a way which is less favourable from society's point of view. The insurer has to pay for any damage that they cause when they get into accidents, resulting in a reallocation of resources to areas that are less favourable from society, decreasing overall living standards. You could also talk about the fact that it leads to higher premiums for safe drivers, so there's an under-allocation of resources towards providing car insurance or health insurance to safe drivers or healthy people. Define the term asymmetric information and explain using an example how asymmetric information can lead to the problem of moral hazard and adverse selection. So again, define asymmetric information when one party has more information than the other about a transaction. Adverse selection is when asymmetric information leads to the uninformed buyer purchasing adversely or not optimally, resulting in an over or under allocation of resources to particular products. One example is the used car salesman selling it above its true value, leading to consumers making uninformed decisions and paying a higher price than the value. It can also lead to moral hazard, so we're looking at two different examples here, where an economic agent adjusts their behaviour to the one that is less efficient. It typically occurs in insurance when economic agents are somewhat insured against the risk of loss and then become less risk averse or more risky in their actions. They then start to act in a way that's less favourable from society's point of view, resulting in a reallocation of resources to areas that are less favourable because there's more accidents in society. Okay, so that relationship between asymmetric information, which is the insurance company not knowing as much as the actual driver about how they drive, leads to moral hazard because they drive in a more risky fashion. That then leads to adverse selection because safe drivers do not buy car insurance because it is too costly and the premiums increase. It's the same with health insurance. In terms of the principal and agent problem, basically what that means is when the principal and the agent have different priorities. So it can occur in employment contracts when people don't work to their potential because their interests are not in line with whoever hired them. That can hurt technical efficiency because people don't work to their productive capacity, leads to a lot of idle and wasted time. Then less goods and services are provided for society. That can be fixed through signalling and screening. So signalling means looking at their previous experiences, place of education, etc., etc. And then screening, they can screen applicants through job interviews, aptitude tests, setting up cameras, performance-based pay, etc., etc. This Facebook stuff would actually probably belong in screening because it's the employer actually physically working out what to do as opposed to the person just giving information about themselves. So it's the employer seeking information on their own behalf. In terms of private and government solutions for asymmetric information, so you may get asked, explain an example of asymmetric information and how the private market could solve this problem. Again, I'd probably be talking about an employment contract and explain all the ways that they can find out more information and screen applicants and signal what they're likely to be like. In terms of other markets, independent reviews, so the internet provides you with information about products. Insurance companies varying their excesses. So, for example, they find out information about the history of drivers. Those that are more risky are charged higher excesses and higher premiums, so higher costs for getting the insurance. Whereas government solutions, things like removing unfair dismissal laws help because you can sack people if they turn out not to be what you thought. Consumer laws, so it's illegal to mislead and deceive clients, warranties, etc. Nutritional information gives you information about products. And then things like subsidies and advertisements, which we talked about in the past. So here's just a couple of examples of questions to finish off with. Define the term moral hazard and provide an example of how the private market or the government acts to reduce the incidence of moral hazard in one of the following markets. So moral hazard means when economic agents adjust their behaviour to one that's less sufficient for society's point of view. It can occur in employment contracts where people adjust their behaviour once they get a job because their pay is not linked to how productive they are. Employers can reduce the incidence of moral hazard through screening and signalling procedures. So, for example, they can look at their experience, contact referees, look up their Facebook page, trial periods, installing cameras. They can also pay people based on performance. All of this stuff will try and reduce the incidence of moral hazard once they're hired because they'll work to their potential. We're running out a little bit of time, but explain how the problem of asymmetric information may be resolved by the market. Can be resolved by private organisations and associations like independent reviews. Companies can inform individuals of reputable dealers and chat forums, so chat forums, review services, and then in employment contracts through signalling and screening and trial periods.